Okay, let's jump straight into it. A little bit late on this one. It's actually past midnight here. So what are we at? Almost 20 past 12. So yeah, this is last vid I'll be doing from home base for a while. Actually off to Europe tomorrow. So I thought I'd at least put in a bit of a sort of weekend wrap. Just have a look at sort of how things sort of progress throughout the week and see if we can make any sort of light of what might be sort of coming this week because as most people are probably aware, we got absolutely, well, not we, but everything got clobbered into the close of last week. So, I mean, I've got gold charts up on the board right now. Look, there was a couple of things that really sort of set these moves in motions. It was PMI Friday, basically. We had, let's see if I've got the data here. Let's just have an updated. But in short, as you can see there, we had all the PMI data. Let me go back where we at. Excuse me. So yeah, look, it was PMI Friday basically. We had all the PMI. We had started off with the Aussie. Aussie's not really generally too affected by sort of PMI data too much. I mean, again, look, all these things do play into it, but some currencies are affected a little bit more by these. I guess just basically on their sort of economic sort of structure and make up a little bit more. But even if you just go off this here, you can see that the Aussies are sort of regarded as a low tier news, and then sort of like Europe and US, and also sort of the UK sort of being the sort of the more sort of predominant ones through here. So we had just before we get to the European PMI, we had UK retail sales coming in definitely a little bit stronger. That was also revised up a little bit, expected to sort of tick up anyway, but obviously beat it quite substantially. Not really a great deal of an effect on the markets as a broader sort of sense, and that outside actual sort of like pound pairs. So it didn't really sort of flow on too much, though, as I said, PMIs, they're the ones that we're looking at. And as you can see, it's just a sea of red coming out through Europe at the moment. And I'll get on to why this is important in a moment. But, these things, basically, you got a 50 years of bench line, benchmark, above 50 years expansion, below 50 is contraction kind of thing. Look, no one was really expecting anything too major sort of coming through here. But as you can see, everything that did sort of actually come out, apart from, well, I suppose you had a couple of sort of prints and that sort of above 50, but everything came in below expectation. So the market had been pricing for the idea that it might be doing a little bit better and look, let down. So that's going to sort of weigh on the currencies a bit. So we had that firstly weakening it for one side, and then on the flip side of that, we had the US data coming out. And as you recall from the last couple of videos that I've been saying, the US dollar DXY, particularly because that's how we sort of gauge it, is running off strong economic data. At the moment, the cuts are coming. Everybody knows the cuts are coming. You're seeing all these sort of central banks that are starting to sort of cut, sort of talk about cutting. The Swiss bank has sort of cut twice now, unexpectedly as well, caught the market off guard, which obviously sort of, added to a couple of bits of sort of US dollar strength there as well. Um, you know, the BOE, they held rates, but they're down at 2% on their inflation. ECB, they're sort of cutting. And the Fed, they will follow suit. But the question with the US is when. And, they're propped up by strong economic data. The two things that they're tackling are inflation and then obviously starving off a recession. So if they're getting strong data like this, well, the recession talk's not really, at the forefront. So what does that leave? It leaves the inflation talk. Okay, well, inflation's still well above their target. I can't remember what they came in at 3.3 or 3.2 or something. They want to at least get a 2 in front of it, if not low twos. So that means that the inflation is the thing that they've got to tackle. And hence, that's why you saw US dollar sort of tighten up a little bit there as well. Cool, and back. Yeah, so again, that was the double-pronged approach. So let's jump back on this one here. So you already had the gold sort of and the metals basically sort of selling off a little bit down here, which is a quite surprising move in that because realistically, as you can see, we got this little channel that it was kind of sort of forming here. It did sort of close outside here. This is on the 4 hour as 1, 2, 3, 4, 5 closes outside on 4 hours. Obviously, it wasn't doing much. It was just sort of consolidating the highs here. But as it sold off, bang, it came down hard, and which is, you know what I mean. Like I was saying, I think it was Thursday's video or maybe Friday's video. I can't remember which one it was, but this is why we have price targets. Because I did literally specifically said that sort of like you have the second price target here because this could come back down like this and then come back up like this, and you don't want to get stopped out and find you make nothing through this whole move. So this is why you have price targets and you take little bits off along the way. Anyway, enough of that. So finished on quite a sort of strong bearish close there. As you can see, look, there's been a couple of like sort of grind up, smash down, grind, smash down. So you got to take note of this because, you know, when they want to sell it, they don't hold back. Like these moves here, these are 4 hour candles. You got two large ones here, dribbling down a little bit further. We had like a series of it all coming down here as it broke through this 2400 period. So obviously, once they start to sell it, they're not shy to sort of just really just cram it right down. But each time it is finding support and it is sort of carrying itself back up. So interesting sort of where it did sort of come into. So like I mean it's a little bit of an overshoot of what this sort of little support would have been through here. So I'll be watching sort of early this week to sort of see, mainly I want to see 2300 hold. If you get underneath 2300, I mean look, 2280, that's a very strong area for the downside, but you know these are the kind of areas that you really need to hold if you're still keeping the sort of the bullish case alive at the moment. And look, obviously, sort of, you know, it's sold down and it's sold down a lot further than this prior. So, you know, we are still technically putting in as of right now at least. I mean, obviously this hasn't turned around yet, but we are putting in higher lows. And I guess you could almost sort of say to a certain degree, you got a higher high here as well, and that actually lines up relatively well. As I said, a little bit of an overshoot here, so I wouldn't be putting all my money on the fact of this being, oh, hold on, wait, here's a channel here, because of this sell down, you need to respect the fact of how hard it did come down, and it was a little bit sort of data driven. You know what I mean? It started to move a little bit before it. If you have a look at this here on the 1 hour, so US PMIs came out 11:45, so this on the 1 hour candle. So this is your 1 hour candle coming down here. I suppose actually it was holding up relatively well before that, wasn't it? So you sort of started to see it sort of really break through here, but once you can see a little defined area here, and once it actually came through here, it just went bang and sort of carved all the way through down here. As I've said a number of times as well, disregard the last couple of hours of the week. That's just nothing. Nobody's at their desk. No one really wants to do anything. So come Monday, look, it's hard to sort of see this going, okay, bang, and shooting straight back up here. There were a couple of other factors, actually. That's what I had to sort of say about the market on Friday. There was a whole bunch of sort of options expiring as well. Now, I'm not a complete sort of expert on this, so all I could really deduce from it was that we were going to see a little bit of volatility and potentially a little bit of sort of selling down across the board in the market. Now, it wasn't necessarily gold, but I don't really know enough to sort of comment enough on it, only just sort of what commentary I saw from other people, sort of saying that this would be sort of a bit of a sort of risk aversion, sort of sell down of a couple of things. So, you know, you've got that happening, you've got the PMI stuff happening as well. And those two things combined, end of the week, bang, they just got knocked down. So come Monday, look, it's hard to sort of see these things just, as I said, just going whoop and shooting straight back up here. So you would expect at least an attempt to sort of follow through down here. So maybe around these sort of 2308s or so, where we can see that's been a little bit of an area of support previously. I wouldn't be surprised if you see people have another little go from down here, but certainly you got to respect the fact that it got hit on the head so hard, and we got to sort of see what can happen from there. Possibly a channel happening here. But, you know, generally you get these nice grinds through the things. You don't get it just going from top to bottom in more or less, you know, one straight move. So, yeah, we'll have to sort of see how things sort of play out on Monday and see how much more of a flow-on effect there is from that. Another small little thing with gold, there was a story that I was reading about one of the banks in Japan failing at the moment. And by all accounts, it seemed that people were likening it to the SVB, Silicon Valley Bank situation, which we had probably a couple of years ago now, was it last year, year before? If we can zoom out, I could probably actually see where it was, because that, if you recall, was what took us to This is on the weeklies. This was one of these areas here. I think possibly it might have been this first big push up here. So yeah, I'd have to see maybe creating those 20. It was one of these highs along here. So it's a bit late. I can't really work these things out, but it was one of these highs that really got things kicking off and pushing to effectively almost all-time highs. I can't remember which one of these spikes it was. Maybe it was one of these two here because it wasn't 2020. That was COVID. And then I think it may have been this one here. And then we've got Ukraine kicking off there, or maybe vice versa. Those two. Anyway, regardless of the point is that the banking crisis kind of situations are something that does obviously sort of lead gold to be a bit more of a sort of bullish side of things. So it's just something to keep in mind that you know what I mean. If that does eventuate into something as well, that could be another driver for gold to stay a little bit more elevated for the time being. Obviously, I've got it on the weekly here. You can see more or less we're just sideways. So till you break sort of 2280 substantially and sort of hold it there, you've got downside. But as I said last week, jump back onto the daily. Um, this is the move. Oh, wait, where we're at. Maybe I've delayed it. Not quite sure. But I would say that, look, the move down here is just too crowded. And I believe, and I called sort of 2350 and 2380 for the levels I was watching for. 2350, obviously we took that out. We got close to 2380, we were within 12 bucks, but didn't quite get there. And obviously this is a bit of a bullish engulfing here. So yeah, watch to see how Monday sort of plays out. Look, even if it is going to go down here, it's going to push up a little. Nothing goes straight down, except for maybe these two here. But I think this was a lot more of a vital level that it broke to sort of feed those moves coming through there. So we'll sort of see how we go. It's first attempt out of this little sort of fall in resistance, but obviously as of right now, knock back on the head. Cool. Flip across, keep moving. We've got DXY. DXY is obviously the sort of driving force of these kind of things at the moment, and we are seeing a next sort of little leg along here. Breaking the highs, breaking these little wicks over here. This is its kind of last line of defense before sort of tackling 106.46. So if we see a straight sort of continuation coming into the new week, then you know we're probably going to sort of be seeing 106.40s. Maybe look for the body fill of these ones over here, if not moving right up into that sort of resistance zone there. It's annoying when it doesn't work. Click, bang, through here. We'd be looking for that body fill. A lot of this is driven by, obviously, as I just mentioned, the PMI numbers. So, you know, they are a little bit like when they do get a little bit of stronger data on the home front, that sort of, you know, that sparks up the fanboys and, you know, DXY sort of guys start to move it on for the bid. But as well, you got to pay attention to what's happening in Europe and these sort of elections and everybody's sort of saying, look, it's moving a little bit more right leaning, and obviously people are going to be sort of doing a little bit more sort of protectionism sort of kind of attitudes and this kind of stuff, and that just by almost definition, even just sort of saying it, makes you think, oh, you know, people doesn't sound great, a little bit risk aversion, risk off kind of thing, and that is giving US dollar a bit of a bid as well. So it's not just the one lot of PMI numbers that were a little bit stronger, but it's that plus the Europe stuff. And you remember that Euro makes up, I think, about 60% or so, 50-60% of DXY. So as Euro gets hammered, we're going to see, you know, DXY push up a little bit higher with it all. For the most part, when you look at this in relation US dollar to, say, Aussie, Aussie held up very well throughout a lot of the week in that. It did give way at the end, like everything did, but for the most part, it was ignoring this US dollar buying, which makes me think, and sort of like I just said in the comment a second ago, that it's more sort of euro based, opposed to a complete market risk off, risk aversion kind of thing. We are seeing a couple of little sort of top looking signals in equities as well. If they tend to sort of pull back a little bit further, that's another thing that could be driving DXY a little bit higher as well. So as this is pushing up, it's going to be making things a little bit tougher for gold to really sort of catch a bid. But you know, as I said, I just don't think that this is necessarily the time that people go, let's go to all-time highs, unless you're sort of really trying to sort of do some damage and sort of short squeeze people. It's hard to sort of see them doing it because, you know, as I said, the cuts are coming. Like it is coming. Yes, okay, it might be a couple of months later, so you might be able to squeeze a little bit more out of it between now and then, but they are coming. So, and when they do come, most likely we're going to see US, well, you will see US dollar weakness. There's always see weakness in a currency as they start to sort of cut rates. All right, so if we get down on lower time frames, what am I looking for? We've got a little bit of a sort of maybe a bit of a channel-ish kind of thing sort of forming through here. Not a really big fan of this one through here. As yeah, maybe a little bit through here. I think it'd be something to look for in that. Certainly, if you get back down below, like maybe this little area through here, as I can see that this was resistance, tried to hold it for support. I think if we get back down below 105.64. We call this one continuing down. Let's just call it cooling, actually. Cooling off. So that's the downside confirmation that I'll be looking for. Till you get that, I don't think too much of it. Just a little follow-up with this one here, because we've got second review of this negative divergence. This did play out. As I said, it's relative to the hour, to what you're looking at, and this is on the 1 hour here. So you're not going to see necessarily a big, large market reversal. But as this did come up here, we did see a pull down, and then across, and then a second pull down. And then obviously, as we've been through a number of times, excuse me, it just sort of hammered on into the end of the week. So certainly, look, take out the highs above 105.95. I'd say this is continuation here. Data's already passed in the future. That's the 30th, whatever. Doesn't really matter. So this would be DXY. That would be your sort of continuation there. As we are sort of seeing, this is still pushing up higher. One thing I'm just taking note of now, this buying pressure is not backing it up. Again, this is just on the 1 hour, but this is 3 lower highs with this as price is still driving higher through here. So that's something to sort of keep in mind. Again, 1 hour, not necessarily going to see a full turnaround, but it does mean that it's not full conviction for the move that they're moving up here. We are sort of seeing this, as you can see here. Sorry, what was I saying a second ago? Yes, it's sort of a little bit overbought. This is on the 4 hour, but look, you got to respect the fact that you are getting these big, long sort of pushes through here. So yeah, as I said, look, they're the two levels that I'd be looking for. Till we sort of see one of those two break, I don't think we're going to be seeing a great deal of direction. There was a very quiet sort of Friday session up until US stuff sort of kicked off. Flip across Aussie quickly. Yeah, as I said, look, for the most part, it was holding up. It was a very tight range for this area here. I mean, if we have a look through here, this is 27 points. And I mean, it came through the area there. But look at that, 2 days, 2.5 days in 27-point range. That was tight. And it was just boring as all hell to sort of watch. But, you can see a follow-up of this here. We've got the sort of little consolidation box that we were saying. Broke through, retest, failed, came down here. So still in the range, in the main range here, as you can see, we're still sideways. We're just halfway through the box there. And if you watched what I was saying the other day, these ranges, you generally do this. You can find generally 2 ranges within a range kind of thing. And as you can see, resistance, support, resistance. And where did it stop? That's where it came down to. So retested this area here. You know what I mean? It's yeah, it'll be interesting. I don't think this necessarily is the start of. I mean, look, I could be very different. I could be singing a very different tune tomorrow, but I think you need to respect the fact that things sold down heavy into the end of the week. You're going to see some flow on with that. That could bring Aussie back down to the 61% down here. But again, I just don't think that that's necessarily the move that's going to get us bang necessarily broken down. What is coming up for Aussie this week is CPI. And CPI is on, just check with me, Wednesday morning, Melbourne time. I think I'm in Dubai at that stage. So Dubai 5 a.m., I think I looked at it, was Yeah, here we go. Aussie CPI. So it's expected to come down a little bit here, 3.6 to 3.5. If this comes in hot, Aussie is going to rip. Like that's it. They're talking the talk. They're the only central bank that's hawkish at the moment. If they come in high with the CPI, Bullock's going to show what she's made of, in my opinion. That's what's going to get you a major breakout. Now, if it comes in lower, I think that coupled with potentially a little bit more of a DXY USD broad sort of buying across the market, that could be giving us what the breakdown is. But as you can see, we're really in a range here. It's admittedly, it's what, 70, it's 100. Well, I mean, you've got these outlier paths. So realistically, the bulk of this range is through here and through here, 90 points. And that's going back to, start of May, basically. So it's been very, very tight through here. Great range play, but, you want to see that break. So CPI is going to be the main one to look for the Aussie for this week. Again, look, if the market starts buying US dollar broadly, that's going to stifle any kind of Aussie sort of move. But if they can really put their money where their mouth is and they can get a high CPI and say, bang, we're going to raise rates. Remember, the high CPI just puts it more in the camp and idea of us raising rates. When she actually does raise rates, if that does happen, that's when it'll really hammer. But you're going to see a lot of positioning based on her wording from the last meeting that she will very much sort of be very sort of hotly contesting the idea of raising rates if the CPI comes in high. So that's going to be a vital, vital number to be looking for Aussie for this week. Monday, look, again, it could see a little bit of a flow on. It could find support around here. I know that's kind of like it could be doing this, it could be doing that. Areas I'd be looking for, the 61 here, or just a hold of this mid-range here. We've seen that the market has come down and held it every single time here. Look at this one. I mean, this came back from 67, bang, held it, held it, held it. When they did give it up, bang, they gave it up. So look, it's not definitely open and closed, or shut, whatever. It's late. Case of it just sort of coming crashing down through here. But you've got to respect again, the whole market was selling off a little bit there. So see how they digest it on Monday morning. Speaking of things getting smashed down, copper. Look, they call natural gas the widowmaker. And look, I don't trade natural gas, but I've seen the charts and they're pretty horrendous. This would be my own personal version of. This thing has just been an absolute nightmare to trade down this level here. Let's have a quick look if we can here. So we had this little channel, nice little breakout. I've caught this move here, stopped out. Caught this move, added, caught this move, bang, stopped out. Then I caught this move, stopped out. It's just been an absolute nightmare. So we'll see how we go sort of through this week, but it's certainly something to pay attention to because we are really flirting with this major trend here. We've gone underneath it. We've tried to get back above it. We're back below it. It is kind of rounding off, and this was the original sort of thesis of this, was that we might be sort of seeing a little bit of this rounded top. Jesus, your platform's annoying. This kind of thing. I mean, it is somewhat coming around like this. You could say, okay, it's a rounded bottom. Take out these lows down here, and then I think you're down and you're out. But we'll have to sort of wait and see. But I think sort of for now, if we clear up this chart a little bit, we can really sort of say, look, the two levels that you want to sort of stay above or below are here and here. You get above these highs, 46, 460, whatever you want to call it. You get below 437. Yeah, 437. That's where you're going to see your moves. So Well, 46. We'll leave that one there because that's where it was, and I would say this is it. And done's the downside if we go through there, in my opinion, of course. Again, look, everything sold off coming into the end of last week, so you can't really say, look, it was just one, it was just that, but it was just, I mean, there was just no reprieve. It was just do, 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 do. Again, look, slowed down into the end of the week. You can't really put too much on that. So yeah, we'll sort of wait to sort of see how this goes. But yes, it certainly has been an absolute nightmare of a trade. And finally, across with China. We did see it sort of give up this resistance through the week. And as we can see, broke out here, came down, retested, yet to put in a higher high. If it puts in a higher high, this is where we're going, up to the top over here. It's going to drag this. So boom. That's going to be your price target up over here. Should have put in a higher high. There's not really too much to go off for a while here. Going back through here, chopped through here pretty quickly. There was a little bit of congestion around this area here, so I could see it stand to reason that they could sort of hold it up a bit here. I did hear or read a couple of articles sort of saying that, look, they're happy to sort of let the currency go a little bit, but they're going to sort of do it at a steady rate. And I mean, if you look at this chart, it pretty much tells that story. You've seen massive sell downs, but these moves up are just grinding away. You're not really seeing any of these sort of size candles rocketing up to the top side, unless they're coming off the lows, like these ones here. But yeah, so again, look, if we see it go above the top over here, that's the target. That's where we're looking for. I don't see it necessarily coming back down to the bottom side over here for now. And again, these are the kind of things, these are how all the charts and everything sort of play and work in with each other, that this will sort of impact sort of Aussie. It'll probably impact copper as well. And also, you're seeing sort of US dollar buying across the board, similar with the strength that you're seeing here. Finish off quickly just with silver. Look, it pretty much played exactly the same game as everything else, but certainly with gold as well. And we saw it really attempt to get out this top side here. Like we got this little sort of channel coming down here. If you saw, I did a little video here, sort of around this part here, had the targets, bang, bang, smacked up to the top side here. It really sort of disappointed of any kind of follow through into the end of the week. I mean, you can see it here. It's just crunched straight back down to retest the top side of this little breakout area. It's overshot it a little bit. It's hard to think because obviously, look, it got out for a second, but as it sort of went for its breakout, they stepped in and absolutely smashed it apart. So, look, it does have the hallmarks of potentially going, okay, look, we tried to get out, no, we didn't, so boom, 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 boom. If you do that, well, your targets are potentially right down here around 28 or so. So that's another 150 points. If it gets on a roll and goes down here, most likely won't go in one go. It'll come up a little bit and then dribble down again, unless it's some sort of news-driven thing. As I said, I do think we'll see a little bit of a reprieve from some of these moves through Monday. But that could just be a little bit of an Asia session stuff around before they try to re-attack it again come Europe and US sessions. So really to say that these things have stopped their little drop down, you want to see pretty much all sessions give up that absolute onslaught of selling. So Asia's generally pretty crap, particularly on a Monday anyway for metals. Come Europe, see that little, they'll sell it. As soon as Europe opens, they'll sell it, I guarantee. So, and then, once you see that stemmed, see what they do with the US. The US already had a big bulk of, because remember, this is the US session through here. They've already had a big bulk of it. So survive Europe session without getting absolutely torn apart, and you could see a little bit more. All right, finally, just a little bit of news coming up this week. What do we have? As I said, Aussie CPI, that's a big one. GDP from the US, that's one to definitely look out for. Again, look, if they've got strong figures, it's going to be US dollar buying. They have weak figures, it's their very knee-jerk reaction at the moment. This number comes in low, like say they put in a sub 1% or a 1 or a 1.2%, US dollar is going to sell off. They come in with 1.4 and above, on with the US dollar buying. And that'll come up and test the probably top sides of those things there. You've got other bits, durable goods, unemployment claims, these kind of things moving along through here. And that's about it. No sort of super major bits of data coming out this week. Really, as I said, Aussie CPI, that's the one to watch out for. All right, that's about it from me.